Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today we are back out in New York and I'm absolutely delighted to introduce you all to Kristina Fan from Chord. Kristina, how are you?
Hi, Toby. How are you?
Very good indeed.
Thanks for having me.
Oh, absolute pleasure. Listen, I know it's very cold out there. We've got snow dumps happening out in New York at the moment, but there's a hell of a conversation that we've got to come up. So I'm looking forward to chatting to you. Listen, before we tuck into the everything about it, tell us a little bit, if you would, about yourself. Tell us about Chord and what you guys are getting up to over there at the moment.
Sure. Let me tell you a little bit about Chord. So Chord is a FinTech firm in New York City. We are a maker of Bond Road AI, which is an enterprise platform for that helps various decision makers to anticipate and handle rapid and radical changes in their business environment. So what this means, it could be different across different industries, but in capital markets, that could be an event like global pandemic or a geopolitical issue somewhere overseas, or perhaps a disruption in the supply chain, or anything, or actually unexpected deterioration in the credit quality of an issuer. So it could be really anything that comes at you rapidly and changes your market regime or the regime in which you operate. The reason why we started building our machine learning system or AI system in this way is because most of the machine learning is actually pretty broken. So most of the machine learning tools out there are sort of stupid robots. The reason for this is because they really consist of statistical methods that are trained on historical data. And when the present doesn't look like the past, those methods no longer work. And we've seen this really play out in March of 2020, where so many quants who relied on these models failed and really didn't do very well. You know, we think that this is also the reason why machine learning really has not lived up to its hype and has not really been used as actively in investment management, as well as just capital markets in general. Overcoming this limitation is probably one of the biggest impediments for this wonderful technology to be used more productively. But also, there's just in this current environment, I think there's just a bigger need for being able to produce real-time inference and real-time analysis, as well as dynamic pricing. It's something that we all expect. And, we think that our technology is very timely.
I think you're absolutely right on that, because for a number of different reasons, but timely is a big part of it. Look, this is a fascinating time when you talk there about rapidly shifting environments. Probably the last 2 years have been the most rapidly shifting we've seen. I've spoken to a number of people on this show over the last couple of years about the sort of enhanced demands of users and expectations of people due to rapid digitalization with regards to everything that's happening out there in the marketplace. And one of the things I've been fascinated by is the sort of hype cycle that sort of goes in various different stages about machine learning and AI. And how, if you probably go back to 2018, 2019, it was there knocking on the door and saying this is going to be very, very mainstream. We've seen obviously rapid developments with regards to data and quantitative, trading in all sorts of different areas. But probably the sort of scale and acceleration of machine learning that we've seen in other fields probably has lagged a little bit in finance, particularly in the capital markets world. And I'm interested to hear when you talk there about the concept of stupid robots and such like, and things they're not having, people probably ticking the box about AI and machine learning, but not actually really, I guess, getting the main benefit of it within banking markets. Tell us a little bit about what you're seeing and how you're solving that a little bit.
Yeah, definitely. And look, I think it's just an evolution of the field, less so than the field not living up to its hype. We are getting from the situation where machine learning was mainly used by data scientists and researchers who were sort of doing all these experiments in the lab environment. And then the experiments worked in a backtesting setting, and so that they kind of launched pilots. And so I think what people are discovering during these pilots is that running something in production over a prolonged period of time is very different from doing it in a lab setting. And in production, you are faced with a lot of different challenges that we have not considered. For example, there are ML ops issues, right? So there are issues of handling different flows of data. I mean, especially with, in capital markets where most of the data is streaming and, when the market volatility goes up and, when you have days like we had in, March of 2020, where there are not just huge changes, but also huge upticks in volume. You have to be able to handle all this. And that's an engineering problem more so than a math problem. And then there's a little bit of a mismatch of skill set, right? So most of the machine learning specialists are data scientists who are, have background in math and statistics. And then this is a purely engineering problem. So most of the people who actually are working at Chord or have participated in designing this system, they all have computer science background. So they have strong engineering background, strong background in streaming data and, handling large volumes and building scalable systems. And that, I think, marrying these two skills will be increasingly more important going forward. And so, I think the reason why we did so well over the past couple of years in this kind of environment is because we built a system for that purpose specifically, right? So it was already built on streaming data, and it was built with ability to identify and adapt to different market regimes. So it wasn't forced. It wasn't kind of forced on top when we discovered that this is happening. It was part of original design.
You previously looked at it, now adapting it to to what's been happening in the marketplace. It's really interesting, isn't it? And you talked there about a lot about the sort of streaming data aspect of it all, and we've seen a massive rise on that outside of the capital markets. Talk to us a little bit about the sort of use cases we've seen from other industries and how that applies and moves itself over to the fixed income world.
Sure. I mean, we see a lot of interest in real-time inference across different industries. We see a lot of interest in being able to identify what we call concept drift. So this is what kind of academics call the situation when market regime changes. A great example is autonomous driving. This is the situation where if you want your car, which is, now is just a very big computer on wheels, reacting to the environment in the road and reacting in real time and fast enough, it needs to be able to process and adjust itself for unexpected conditions. That's just one example. I mean, really any kind of dynamic pricing in e-commerce. I mean, that's a huge topic, huge application for our technology. Things, even sort of recommendation systems. We know that some of the recommendation systems that run in real time and are able to adjust to consumer preferences or your moods are performing better. It has been, obviously Netflix has been a very good example of something that a recommendation system that was early on. But it seems like now our expectation of how good these systems are at detecting our needs and wants has moved, right? And so now you have to catch up, and the only way you can do it is with if you run predictive analytics in real time.
So let's talk about you and how this sort of comes to pass as well, because this is a very specific issue, and it's as you say, that there's a lot of historic I guess evolution where anything around predictive analytics has been sort of forced around or focused around the maths and the stuff behind it. You've brought in this sort of computer background. Talk to me about your background and how Chord came to be and your sort of journey today.
Sure. So I came into this world from a position of a consumer. Really, my entire background has been in capital markets, and I have a pretty solid quant background, and I know how to code, but I'm not formally an engineer, and haven't been an engineer, although my entire family is. When I came to this industry, my very first project that I worked on was in the aftermath of the failure of long-term capital. I don't know if anybody remembers this, but this was in the late 90s, and it was a hedge fund that was staffed with genius mathematicians and quants, and they failed because they made some assumptions about the future, that they made assumptions that the future will look exactly like the past, and all the relationships that existed in previously will remain. And so that really stuck with me. I think that really built some very healthy skepticism about quantitative models, and allowed me to probably throughout my career to avoid a lot of the pitfalls that my colleagues or my fellow quants have encountered. And before I started this firm, I was at BlackRock, and obviously they were very vocal about electrification in the fixed income world. And I thought that there was, potential for a business plan. And while I was kind of contemplating building a business, I met my co-founder, Roy Lawrence. And Roy is a wonderful person, so very, very interesting gentleman who's had a really long and very productive career, and was a CTO and CIO of major companies like Reuters and Capital One. And then, when most of us would kind of retire at his age, he went and got his PhD in computer science. So that was his way of retiring. And so it was in the aftermath of the financial crisis, and he wrote his PhD about predicting prices in residential real estate. And his specific focus was on being able to build a predictive system that handles this concept drift, right? Which we obviously experienced in the financial crisis in real estate world. When I read his PhD and when I heard him speak about this, I said, this is a perfect fit for the problem that we're trying to solve, which was predicting prices in corporate bonds or in the fixed income instruments. And so we partnered up and we built another version of Bondroid that actually ran in real time. And so that's how it all started. And then we were very lucky that we got accepted into Barclays Techstars accelerator, and they really helped us kind of understand what we have in this whole pile of IP and how to turn it into a business model and how to market it. And later that year, that was July 2018, we launched in production. And so Bondroid has been in production ever since. So we lived through 18, 19, 20, 21, 4 very interesting years. And
what a journey.
What a journey, exactly. So we've ran in production for 4 years every single day, and that's a 24/7 kind of setup. So
incredible.
So we've lived through many interesting days.
So I love those sort of stories about people who are experiencing the problem and sort of become so passionate about it that they go and find a solution and give them the confidence to do that. It's a really interesting thing for you because it's again going out from a corporate background into an entrepreneurial one. We all know that there are challenges and as well as great opportunities to being a female on Wall Street that must have been thrown at you at that sort of stage, being a first-time entrepreneur as well. Barclays have obviously come in there and given some support through the accelerator program, and I know they've done some great work with a number of different fintechs, but not all of them sort of launched in 2016 and are still here in 2022. So there's a great story for you to tell us a little bit about. Tell us some of the lessons that you found over that sort of time, some of the challenges you overcome, and what you'd do again.
Yeah, I mean, look, being an entrepreneur and running a company is not something that you necessarily get prepared for, right? So it's like any job, you learn on the job and you become better at it as you go along. And I saw on social media, I think one of the CEOs of very successful fintech companies posted that he read his plan, his projections from 5 years ago, and he was actually so embarrassed he ripped it up, or he was, really cringing. So that's how I feel sometimes as well. I mean, if only I knew what I know now 5 years ago. It's sort of like when you look at your high school pictures and said, if I was, that wise back then, my life would have been completely different. So yes, of course, you learn with experience. I mean, having said that, there are many ways to mess this up. There are only a few ways to be successful. And I think it is more of a science than an art. I think it's very important to have somebody by your side who has done it before. But it's also important to recognize that they only did it one way. So they only know one kind of path in this whole simulation. Maybe if they'd taken a different path, they would have a different experience. So it's not like their way of succeeding or failing is the only way. And you kind of have to find your own ways of solving problem while having your advisors by your side. And I think that the passion for what you do definitely is important, but so is grit. It's not always fun. I mean, this is just like any other job. You have to do it every day for many years, and for you to be successful. And I think it's important to kind of realize that your life probably in the corporate America will be has this life, the entrepreneurial life, is not that much different from any other job.
Very true.
It still is
got its twists and turns, right?
Yeah, exactly.
So tell us about some of the things that you've done right. As I said, look, there's some incredible statistics about startups, particularly in the fintech space. And there's one of the common things has been people coming into it and having been so immersed in the particularly from your background, having been so immersed in the problem that then they fail to articulate it potentially about taking it to market and getting that adoption of it alongside. There may also be some examples of where people have had great ideas and great technology, but haven't thought about the runway and the onboarding and the time to go through procurement, etc., to get that right. I'm sure that over the last 6-7 years, there's been plenty of things that you've as you say, that will go back to the high school picture and say this is what you want to do again. But tell us about some of the things you've done right, because 7Chord's been a business that we've kept an eye on for some time. It's had good PR. And a good reputation all the way through it. Tell me a little bit about what's gone right for you guys, and what some of the those classic lessons that you would hand down to a first-time entrepreneur, just about to make their way into Wall Street.
All right, so the good things first, I guess. So I think it's very important when you're building a business to think about the utility of what you're doing.
Yeah,
it's not about the complexity of a solution. And obviously in the field like machine learning or technology, people tend to make it really fancy. I mean, it's all about the utility. At the end of the day, your user or your client, if their job is to basically get the nail on the wall, a hammer will do a job. You don't need to build a whole robot that screws in and or does something fancy. A hammer will do the job. And so I think that it's important to go for the simplest solution possible that does the job. If you think about the utility, where the more complicated solutions are justified, you should absolutely implement them, and you should definitely move the needle on them. But I think it's all about the utility and the customer experience and what they really need. So that we have done, and we have done that because we had a combination of different skills in the team. So we had people like myself and a few of my other colleagues who have been in the industry and have been in the seats of the users of this kind of technology. And we also had people who came to it from the position of from the perspective of the solution, right? So that's where the magic happened, when you had the problem and the solution, and people were really working together on coming up with the answer. So it wasn't really one side that was dominating. So it's important to have very different skills and different perspectives. So both from background perspective, but also from your kind of cultural background, generational background. So, we have people from who are Gen Zs, millennials. We have, Gen X folks and people who are older. So they all bring something to the table, and that's really where the good discussion happens.
Yeah, I think that diversity of thought is so important in a business, isn't it? Where it's not just one dominant force of this is how we need to make things done, but a collaborative mindset of diverse thinking.
Right, exactly. And so I think that was a good thing. We were very fortunate. The second, I think, great thing that happened to us is that we were very fortunate to have the clients early on, right? So clients meaning people who are actually using this technology and give us feedback, because they became the stakeholders, and their feedback was incredibly useful. I wish actually that I've done that even earlier. So probably the first year when we were in stealth mode, we would have benefited. We should have been engaging more with users from getting their perspective. And there's really, it's really what they say. If you're not embarrassed about the product when you show it to a client, that you're probably too late. You waited too long. So that is very, very true. And it's interesting because I actually recently was chatting with another entrepreneur who's very successful. And this person told me, well, I really wasted so much time on building this early product just because I had pressure on getting, revenue and showing revenue. And I wish I didn't have to waste that time. And I said, well, that's probably is not so really true, because while you were chasing that early stage product, you probably learned a great deal. And your path has been defined by those experiences and that feedback. If you didn't have that path, if you didn't have that feedback, you probably would have made a bunch of different decisions. So I think that feedback and clients getting a lot of feedback and not being kind of embarrassed about your product is very important.
I absolutely agree with that. It's one of the core themes I've seen from all of the interviews I've done over the last couple of years is those businesses who are really intent on listening to their customers and rather than forcing the solution down their neck have been the ones that have really thrived. And particularly when there's been that need to be malleable, to listen to a rapidly changing set of problems and issues, which we've seen happen over the last couple of years. That's been a sort of real winning ticket for it as well. What about some of the things that you could have avoided if you could go back in your time machine and say we could have done that a bit differently? These are always time's a great teacher, isn't it?
Yeah, definitely. So I think that going back, I wish we raised more funds earlier and more aggressively. And partially, so my experience was, I think that the reason why we didn't really have a lot of outside capital early on was two reasons. We've seen a lot of people in our industry raise a huge amount of capital and then crush and burn because they underestimated how long the sales cycle will take. Definitely. And these are there are certain things that you can't buy with money. That it's like they say, well, you can have 9 women having a kid in 1 month. So that's just some things that just not scalable time-wise with just resources, right? So they still take time. And sales cycle is one of those things. And so we saw some of these experiences. We were very shy until raising money, until we actually saw that we had a product market fit, and that people were buying a product and that they were happy with it, and that they, it performed in real time and performed for times like 2020. Another thing was that, to some extent, when you're a first-time female entrepreneur, you have to be prepared for the fact that you will face a different fundraising environment versus your male colleagues. It is true, and I experienced it myself, and I heard from others, even the most successful women in this industry, is that for the most part, you're given funds based on your results as opposed to hype and potential. So a lot of times you have to show results before you get those funds, and obviously, that limits your ability to deploy cash and do it faster. Who knows? It's always hard to talk about the identity politics and separate them from kind of the specifics of your business. But that has been a common theme that I have myself experienced and I've heard from others. So that probably, it was, some of that was just about availability of capital for us.
So you found that to be the case, that because of, your gender effectively, it took you longer to be able to raise the funds, or to have the confidence to raise the funds.
Yeah, definitely. And, have the confidence of the investors in us and our ability to execute.
Yeah. It's fascinating, that, isn't it? What a missed opportunity we're looking at there in the marketplace. So when you've gone through the raises, and as you say, you wish you'd done that a little bit quicker, what could have changed to allow that to happen for you?
I think that probably having revenue earlier on, and so as I said, really going after that first dollar of revenue very aggressively, very early on, probably would have made the difference. To be able to get to that sort of phase. Yeah.
It's fascinating, isn't it? And so as we look through that and loads of different things that have been picked up on a journey where you've been really thrown into the eye of the storm with various bits and pieces on a founder's journey, what does that mean we can look forward to? You've taken loads and loads of good lessons on board. You've got a business in great shape, doing incredible things, working on one of the most exciting areas of the marketplace at the moment. What's next for Seven Chord, and how do you take all the lessons you've taken on beforehand to pave the way for an incredible future?
Yeah, we're really looking forward to bringing our technology to broader capital markets. We've been applying it mostly to fixed income, and now we're looking at various applications in other market segments, including crypto and tokenized assets, as well as a variety of other liquid market segments, potentially even private equity or real estate. So we may go back to our roots. But also we're thinking even beyond capital markets. We see a lot of applications, as I said, dynamic pricing across different industries, and in particular in e-commerce and a few other areas that are probably too early to talk about. So we hope that the future will allow us to bring our technology to all of these different industries and help our clients achieve better results.
I think when you're looking at that and saying, right, what is the key to success in this industry, helping your clients to achieve better results, be it through efficiency, be it through speed, through a reduction of friction, through better information, better data, that's at the heart of any of the successful businesses I've spoken to, and I think it sort of screams off the page from everything you've spoken about so far. That's very dear to the heart of Seven Chord and everything you've been doing so far. In terms of this year, any sort of big announcements that we should be looking out for, and things that we can expect to see?
There might be, but then so you just have to stay tuned.
Watch this space, stay tuned. Well, I look forward to catching up and hearing a little bit more about that in the not too distant future as well. Tell me, there'll be lots of different people looking at this and watching this show, and I think there'll be a lot of interest based off what you've just been saying as well. Who should be reaching out to you? Who should be talking to Seven Chord at the moment, and what's the best way for them to do that?
Sure. Well, really anybody who's struggling with price transparency, pricing their instruments or their portfolio in real time. Any firm that has proprietary data that they have trouble processing or is extracting signal from, could benefit from our technology. So really any large company with informational advantage, we should be talking to.
Well, reach out. It's going to be well worth the while to have a chat to Kristina. There's lots of very, very interesting things you're doing at the moment. I'm going to ask you one last question. There's so much going on in the marketplace at the moment. We've spoken about volatility and rapid change and all those sort of things. If you're going to say one big trend that you expect to see in 2022, what should people be looking out for?
Well, there's definitely going to be more change.
The change is there's more change. I like the sound.
More changes. Yes, exactly.
I can absolutely. Yeah, change is the only constant, as they always say, isn't it? So I'm excited to
I'm not afraid to make that prediction.
Well, I don't think you are going to be far wrong with that. That's one which we can hold people to and say you're correct. A tick in the box for that. Kristina, it's been an absolute pleasure having you on the show. Thanks so much for joining us. Please do reach out if you want to find out more. What's the best way of doing that? Through the website, through LinkedIn? What's the
Sure,
the best way to get in
LinkedIn.
touch
Follow
with
us on LinkedIn. We're pretty active, and then we have the contact information on the website as well.
It's a superb story. Looking forward to plenty of announcements across the course of the year with that teaser at the end there. And Kristina, I wish you the very best of luck for you and the team. To everyone who's watched today, thank you very much for watching. We will see you soon on another episode of FinTech Focus TV. For me, thanks very much.